Welcome to a demonstration on what can be done for goods received not invoiced reconciliation. So this is essentially geared towards making an adjustment if there is any discrepancy between the item receipts and the purchase invoice price. All right. And this solution is geared towards as well handling mostly for cost method as FIFO or LIFO, wherein there is a requirement that we have to link to existing transaction to adjust here. I refer back when you process the purchase invoice or you're processing the adjustment against an item with LIFO or FIFO. You have to specify the link to existing transaction to adjust in here. In this solution is basically getting the original item receipts that has been used to post to the inventory account and inventory quantity. All right. So what we need here, we have to create a bunch of custom fields here that will be applied on item receipts, and some are in item receipt and purchase invoice, and others just in purchase invoice, just to get the price in it. All right. So firstly is that we have the custom price. The custom price here is primarily will be used to copy the standard price on an item receipt and copy that to the purchase invoice price. And when we convert it into a purchase invoice, then that price will just move along. Similar to the custom record number in here, is just getting the record number on the line level of the item receipts. As what I said earlier, when you do the adjustment involving a FIFO or LIFO item, you have to identify the link to existing transaction to adjust, which is essentially the item receipt or the original item receipt that has been posted or processed basically to post to the inventory together with the quantity. All right. And you have here the IR day, month, and year. And we will be needing these same for the inventory adjustments. We are just segregating the day and month and year of the original item receipt, transaction date, and move them along to the purchase invoice that will be used for the inventory adjustment. And yep, we have fields in here as well, just applicable for purchase invoice, like the price difference in here, the absolute price difference, just in case you need them for whatever purpose, and we can just show them as well. What are these later on? And you will be needing a bunch of platform trigger. So an example of this one here is that um, if I i- look at the IR detail, so that the IR detail in here for update custom price, this is where just to move basically the price or the standard price right into the custom field for custom price on item receipts. Then when the item receipt is converted, then it will just be moved to the purchase invoice. And we also need the custom record number. Remember, with that transaction in here, we need that for in order to refer back to the original item receipt when we want to adjust LIFO or FIFO item. Okay, so this is the record number. This is just moving basically the record number on the line level of the IR or the item receipt and copy that to the custom record number. And we will be showing these smarts or these platform triggers a bit later. Just what are these for? All right. And more importantly, we'll be needing adjustment. So it depends on whether you want to add value, deduct value. So remember, this solution is primarily for making the necessary adjustment in the original item receipt if there is any discrepancy between the IR and the purchase invoice price. So add value in here, which basically means that we've recognized that the purchase invoice or the invoice provided by our supplier is the correct one, but it happens to have like a greater value compared to the original item receipt. And the original item receipt is where we post it to inventory and debit to inventory or credit to GRNI. And with PI, with purchase invoice, you have a debit to goods received, not invoice, and a credit to IP, disregarding any tax implication in it. So add value is that since we have a GRNI disbalance there, and we just would like to adjust that accordingly and add the inventory and add the GRNI as well. So it will just GRNI will just zero out. So just the opposite of deduct value in here. So deduct value is basically to um, if the purchase invoice price is less than the item receipts, so we would like to deduct the value of inventory together with the GRNI account. So the GRNI will just be, closed at the end of all these transactions. All right, so let's open up quickly what the add value smart event that you can create. So you have here the price difference is zero, and yeah, we'll just be looking at it later as well. But let's have a look at what the API body looks like. So you will see here, you have the transaction definition that will just affect the value. I think I have that somewhere. Yep. So the purpose of this, add value in it. So the transaction definition, it will just be for on hand and add the value, not the quantity, just the value, right? And remember, we have all these fields segregated related to the item receipt transaction definition or item receipt transaction date, segregated per year, month, and day. So we would be needing those to create the inventory adjustment. And yep, the other fields in here can be coming from the purchase invoice, like the item ID, warehouse there, right? The unit cost there, and yep. So the unit cost you will see here is the absolute price, right? Which is actually the difference between the item receipts and the purchase invoice. That's the absolute IND price that we actually captured through one of the custom field, and it should be um, based on the platform trigger too. All right, and we can just have a look at it later as well. And yep, so those are the smart events that we will be needing. All right. And we have the platform trigger, and we should have the smart events as well that we have to create. And basically, this to adjust the value, increase or deduct the value depending on the transaction. And we can have a look at some samples so we can validate whether what we really mean by this. All right. So let me just create a purchase invoice, and I'll just adjust the date of the purchase invoice to the first day of the month. And I have this supplier handy with me. And let me select the tax solution, the base currency, since what I'm using is multi currency. And I have this item. I'll just change the warehouse to this one, and we will just be having the quantity as one. Therefore, ease of our demonstration, and the price is $50. And okay, what else do we need here? I have the location, so if I click on post, all right. So we have this created earlier, right? So this is the one that we just created. Let me just sort it, and I'll just convert this into IR. All right. So with the IR, let me just date it back on the 15th of April. All right. So this is the item receipts, assuming that everything is correct here. So we have an item receipt coming from the purchase order. So these are the custom fields that we are capturing now. We have the custom rec number, custom price. So the custom price will be a copy of this standard price field rather, and this will move along to the custom price. And custom record number is that upon save, get the record number of this line and put that here because we will be using it later on for the link to existing a transaction to adjust, which is actually getting the, if you go back again to this one, um, it's getting the that record number, and that will be used for this field called ADJ, DO doc entry key. So this is, look at this one here. This is the document entry custom rec number. So that's actually that field that is being, moved from IR, and that one is applicable in IR and just moved to the purchase invoice. So yep, so there will be a platform trigger that will copy the upon post of this one here. It will just be copied from the standard record number line to this field, and we will be using that again on the link to existing transaction based on smart event here, right? Okay, so we have the IR day. So the day again, so this one, it will just be segregating it. So because it has to refer back if it's a LIFO or FIFO item, it you have to identify the transaction that that adjustment is related to. So we have to segregate this into the day, month, and year. So I would envisage that this date values will just be populated here, right? And later on, since these are just custom fields that will be used for at the background, and users may not need to see these fields anyways, but for our purposes, for demonstration purposes, then we just would like to see what will happen. So I'm just showing all these fields there. All right. So yes, so normal IR there. If I click on post, and let's have a look what will happen to these fields. All right. If I click on post, and this should be this one. And let's have a look at those fields down below. Yep. So the custom record number is now being filled out because that's the record number of this line. And we have the custom price. So the custom price just again is just a copy of the standard price in there. And IR day 15, right? Because 15 here, and we have a month of 4 April 2024. All right. And let me just run the report here. I have the inventory register ready. Let me just have a look if I can see anything already. Okay, inventory value. Yep, that's what we want. Correct. And we have $50 in here, right? Inventory value. And if I run the GL report for that item, and that's the postings at the moment. So we have a debit to inventory because of the item receipt. My item receipt is actually posting to an inventory account, which in this case is 13100, and it's crediting the goods received not invoiced account for $50. All right, so there's nothing unusual there, and we're good with that one. And the posting and inventory register, we're okay. All right. So let me go back to my item receipt. So now, assuming that I convert this item receipt, I've already received the invoice from the supplier, and I'm ready to generate a purchase invoice. All right, I'll just accept the date in there. I'll just put the tax solution here. not intuitive, but I'll just be using this document number and just for the vendor number as well. All right. Okay. So in this case, so notice this ones here first that you have the IR day, IR month, IR year. So all this information are coming from the even the custom record number, right? They're actually coming, and the custom price are coming from the item receipts. So we will be needing them if there is any discrepancy between the price and custom price. Then we will be populating basically that link to existing transaction, right? So in this case, I think we are this the item purchase invoice. Then I let me assume that the price is actually just based on the invoice from the supplier. This should have been 55, right? So now we will see here that there's actually a difference, right? So the price per supplier is 55, but we initially recorded the item as just $50. So we will be populating all these fields via smart events, and all these fields are platform trigger rather, and we have all these fields, custom fields created for us. We have the price difference, which is yep, and the price independent absolute independent price, total price difference, absolute price difference. So this is the price difference. This is regardless of the sign, and this is the total price if you have a different quantity. But for us, we will be envisaging that this will just be the same because we only have one quantity. But if you have a total amount in there, you can put that there, and the absolute price difference as well if you want to, just for whatever purposes, anyways. But let's have a look here. All right, and I've click on post, and let's see what happens to this. All right. So we would like to have that being filled out now. We have price difference. So price difference, we have custom price minus 55. So we have negative 5 here. Absolute independent price is just the, regardless of the size, it's just $5 because we will be needing that. It's just the amount that will be required in the smart event. So that's the price that we will be, yeah, the absolute IND price. That's what we want to capture, basically. So this is what we're getting. And the total price for your reference will just be the, extended price, right? Minus the price, or what it does is that custom price minus extended price. So 50 minus 55 times the quantity. In this case, we only have one, so they're just basically the same. So the absolute price difference, which is this one too. All right. So we will see in here that there is actually a discrepancy, right, of the price. So which means that um, maybe we can go back again to the okay. Let me see with the inventory register in here. There shouldn't be. Yep. Okay, so you will see in here that the inventory value already changed. It's all because we've already, and if I click on view, okay. So now that the inventory has been changed as well, with the GRNI is now 0. All right. And yes. So what happened there is that it has created an inventory adjustment. So remember, we have this. So this is going to be, so the price difference has been, it's negative 5, right? Because the price in here. So there should have been an increase in the value, right? Because per invoice or per supplier, it should have been 55, not just 50. So if you look at the transaction definition for inventory control, and we have an adjustment in here. We have GRNI add value. Okay. If I view this one here, this has just been created. Um, okay. And click on this one, right? So this is the transaction inventory adjustment created by the smart event. Okay, so remember that this has been linked to the IR, and this is the IR. If I can just open up this one and purchase invoice, shipping IR, and on the 15th, this is the IR, right? Which is, um, yep, this one, SH056. So if you look at the inventory adjustment, yep, IRSH0056. So that's the one that is being called upon when the purchase invoice was created. There was a discrepancy on the price because the price per supplier is greater than the original price received. So we have a $5 increase in the value, and the inventory adjustment has just been created and tagged against the original IR, which is this one, IRSH0056, and it's already there. And again, this is actually required if the item is FIFO and LIFO, and those are just based on the record number in here and whatever value that we have for price difference, absolute price difference, and just made the adjustment in there. And you have the item 1140 warehouse, same warehouse we used, and the discrepancy is $5. So essentially, what we achieved here is that that item should be valued not just $50, but $55 just based on the um, received on the purchase invoice, right? And if you look at the general ledger report now and click on view, so you will see in here that the inventory balance, right? So the inventory, this is the original receipt, which is 50, and we have an inventory adjustment for $5 and it's now 55. That's what we want, right? So when we reconcile this with the inventory register of that item, and the inventory is now being updated, the inventory is $55, and which is similar to this, right? The inventory is 55. And what's important as well is that Share and I, we don't want to be having this value to be just hanging. Basically, we would like to clear this, and it's now being cleared. So initially, it was $50 as a credit, but when we processed the bill, it was initially debited to 55 because this is the amount that the supplier is telling us that that should have been the amount of that item, and we made the inventory adjustment. So crediting the inventory adjustment, crediting that GRNI account, which is $5. So at the end of the transaction, so if this transaction of one quantity for $55, at the end when the purchase invoice has been processed, then the GRNI account, which is the goods received not invoice, should have been cleared. So as what you can see, it's now showing a debit of 55 and a credit of 55, so zero amount at the end of all these transactions, which is great, meaning that we have fully accounted for GRNI and we've cleared everything. So that's why it's zero now. And also, the inventory has been valued correctly, which is $55 now. So if you look at the inventory register, that's what you will see as well. So when you do the reconciliation between inventory register and the general ledger, then you have the same amount for that inventory. And when you look at the general ledger account and you run the financial reports, just looking for that particular item, then as of this date, then the GRNI account is now appearing as zero, meaning it's already been cleared. So hope this quick demonstration helps, and please contact your partner for any guidance on how um, this will address your requirement. Thank you.